In terms of our performance since inception, the fund has, once you are invested in the fund since inception, would roughly be worth around 4.3 CR today. The same invested in the index would be at 3.46. How does it translate it in terms of an IRR? The fund has generated a post fees and expenses of 18.72% since inception. If you look at our 2025 returns, you will see a brief underperformance in calendar year returns. I'll look at breaking it down slightly further around where it came from and how the trend of the performance has been in the last quarter and how I would expect this to be in the next 2 quarters. So if I look at our performance in 2025, Jan and Feb was a period of underperformance. As you can see, the fund underperformed Nifty by close to 7.2%. Whereas there was a consistent outperformance over the next 4 months. Where this performance came from over the first 2 months, typically in periods of drawdowns, I would expect our positioning to ensure we fall lesser. However, this was an anomaly in terms of the first 2 months, predominantly driven by our pharma exposure, which had a significant drawdown in Jan and Feb, considering there was noise on the tariffs. I had spoken about this in the March quarter, saying that this has to revert, primarily because earnings was not deteriorating. And even if the worst case tariff news had actually come into fruition, this would have resulted in margin expansion for many of the Indian pharma companies. So far, there has been a reversion in terms of both earnings and margins, and there has been that reversion in terms of the performance. In the future slides, I'll break it down at both sector as well as company specific level. But the broad gist of this is while the quarter gone by has seen this outperformance come through, I expect the subsequent 2 quarters to continue along the same way in terms of this outperformance.